Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today we have got a bunch of Bitcoin news, and then we've really got to talk about the Bank of England. We've got to talk about that. We've got to talk about inflation for a bit, the Fed, and then we'll get into some charts and some trades. So let's go. Bitcoin will hit $100,000 by the next halving, according to Morgan Creek CEO, and I think actually a lot sooner than that. Bitcoin has officially sent $100 trillion worth of value now. So a big milestone for the Bitcoin network. And in case you're thinking you're too late to Bitcoin, this is how early you are. You can see here that this is the debt market in green, real estate in blue, by market cap this is. Gold sitting here at around $12 trillion. And this tiny little thing that you might not even be able to see at 0.36 trillion, that is Bitcoin. So just to match the market cap of gold, we are looking at orders of magnitude higher in the price of Bitcoin. Bitcoin on a monthly chart is looking like it's starting a new bull market. So if we zoom in on this, you can see that we've got the MACD shifting in momentum. We have got the RSI trying to find a bottom, and we're about to finish a monthly candle here. So if I pull over to a chart now, you've probably, if you've seen this channel before, then you've seen this chart a million times, right? You know what I think? I think we're going to drop into a cycle low denoted around this time frame by the green vertical line here, and then I think we're going to emerge. And if we come off to a monthly chart right quick, and I zoom in a bit so we can see this, then you'll see that we're only one monthly candle away from that cycle low, and then I think we can start to move. And I wouldn't be surprised if we do something like this out of this cycle low. Now, this is not a popular opinion by any stretch of the imagination, but I don't think we can rule this situation out either. So anyway, that's that. The Bitcoin industry will be bigger than the banking industry, which is $2.7 trillion. We're not that far away. That's only like a 10x. I think around $200,000 per coin would see us at around the same market cap as the banking industry. And I'm sure that will have a whole bunch of bankers sweating. Price at the halving is historically at fair value. Assuming fair value doesn't move much lower, that would mean around 40k within 18 months. That is 100% return within 18 months. Now, in the crypto space, that is often sneezed at. However, in traditional investing, that's a pretty good rate of return. And I think this is incredibly conservative, as I've already said. I covered this in yesterday's video that PayPal's new acceptable use policy, beginning on the 3rd of November, will enable the company to withdraw $2,500 from your account if they find anything you've said to be objectionable, including misinformation or discrimination. So I already showed this. I also showed that, according to them, this was a mistake and was never supposed to be in there. Maybe it's bad, maybe it's not. But one thing I thought was interesting is Google Trends for PayPal close account have skyrocketed over the last week. And I've noticed this morning that bankrupt PayPal was trending on Twitter. So is this a short? Is it time to short PayPal at the open? Maybe it is, maybe it isn't. I would think this thing is going to gap down, to be honest. We'll see how it goes. But if it doesn't gap down massively, then this could well be a trade. So I thought that was an interesting idea. Although I'm probably not the only one that's thinking this. We'll see. Bank of England. We got to talk about the Bank of England. This is, look, officially from the Bank of England's Twitter profile, verified and everything. They have come out and said that the bank today has announced additional measures to support market functioning. Here's the full details. So you click this link and it takes you to this page here. Bank of England announces additional measures. Scrolling down, you can see that, as they previously announced, the bank plans to end these operations and seize all bond purchases on the 14th of October. This is, of course, their unlimited QE that they've been carrying out since Wednesday, 28th of September, to try to stabilize the bond markets after the pension funds got margin called. So turning the printers on to buy bonds in the middle of a rate hiking cycle, not a good look from the Bank of England. And now they've announced these three things, and we've got to talk about these because just wait until you see these. So this is a lot of words, but the crux of this is they're going to double the size of their bond purchases from 5 billion to 10 billion. That's the first thing. The second thing, the bank's going to launch what they call a temporary, of course, when a central bank says temporary, it never is, expanded collateral repo facility. Ultimately, what this says is this facility will enable banks to help ease liquidity pressures facing their clients. So let's pause here really quickly. What does help ease liquidity pressures really mean? Well, they need to ease the liquidity issue, and the liquidity issue means that the order book is stacked one directionally. Okay, for every buyer, there's supposed to be a seller, and for every seller, there's supposed to be a buyer. This is not the situation we have at the moment pertaining to the bonds. The bonds have no bid. There is nobody willing to buy these bonds, and that is why the Bank of England is having to step in to buy these bonds. This is what the liquidity pressure is. The liquidity pressure is there are no buyers for these bonds. There are only sellers, and this is what's causing the bonds to tank. Okay, so they're having to step in and ease liquidity pressures, meaning they're having to step in and buy the bonds that nobody else is willing to buy. But the key point of all of this is they are going to accept a wider range of collateral than normally eligible. Okay, so under their standard framework, they can only accept certain types of collateral, and now they are widening their acceptable range of collateral. Okay, that means that they are desperate to come up with anything to back this debt. Okay, and if you look at what they're doing, they're talking about index-linked gilts, right, and corporate bond collateral. So they're going to be collateralizing this bad debt with even more bad debt. They're collateralizing junk with even worse junk, right, even more junk. Third, the bank is going to also stand ready through its regular index long-term repo operations, which happen every Tuesday, to support further easing of liquidity pressures. So we know what this means because we've just covered it. Further easing of liquidity pressures. They have to put a bid underneath these bond markets because there is no buyer. Okay? And they're going to step in and do that on a Tuesday. And this permanent facility, will provide additional liquidity to banks against the SMF eligible collateral, which we know they've just widened to include even more junk, anything they can to back this bad debt, including index-linked gilts, again, more trash bonds to back trash bonds that no one wants to buy, and so support their lending to the counterparties. Liquidity is also available through the bank's new permanent short-term repo facility, which was launched last week, which offers an unlimited quantity of reserves at the bank rate each Thursday. So we've got, from the top, we've got them increasing the amount of bond buying from 5 billion to 10. So they're doubling the amount of bond buying. We've got them expanding the amount of collateral, the range of collateral that they can accept under normal conditions, under their normal framework, meaning that they're going to accept anything as collateral now, even if it's index-linked gilts, which already have no bid or no buyer and no liquidity. And third, they're going to be easing every Tuesday and every Thursday in what they call an unlimited quantity of reserves. So much for stemming inflation, so much for putting a stop to inflation. The pound is going to zero, as are all fiat currencies. Do you remember I've been showing this for a while? The Bank of England, after Boris Johnson, they're talking about moving the goalposts, saying that maybe 4% inflation target is more sustainable or more usable or more realistic than a 2% target. Well, and I said that America would do the same. We've just had an article from The Economist published saying the end of 2%. Okay, moving the goalposts from 2 to 4% in the US. Make no mistake, inflation is never going away and 2% is not going to be achieved in our lifetimes. At the same time, it appears we've hit a point where the Fed is in the red. After the latest rate hike, the Fed's interest expense now exceeds interest income from its QE portfolio. This doesn't affect monetary policy, but I believe it's the first time it's ever happened. Okay, and so you can see here, all Federal Reserve banks earning remittances due to the US Treasury. They have gone negative. Look at this, negative since the last rate hike, and they're still talking about hiking another time. And then we come down here, and you can see in the past, the Fed would have earnings because of its QE income exceeding interest expense. It would remit that to the Treasury. But after the latest rate hike, there are no more remittances. So you can see that here. The Fed is officially broke. I posted a video titled something like "The US is insolvent." And I recommend you go and watch that because I did the maths and I showed exactly this. The Fed is completely broke. The USA is completely insolvent. They have to pivot soon. They have to. Also, I found this. This was just posted yesterday from Elizabeth Warren. Look at this. I've been talking about this as well. Nearly 80% of Americans support banning members of Congress from buying and selling individual stocks. She says she's got a bipartisan bill for that and it's time to get it done. So they keep talking about this, but they're never really doing anything. But remember, I posted this video as well. Here it is. It's called Blow This Off and Let Congress Out of the Top. Go and watch that if you haven't seen it. But this kind of seems like this is what's going to be playing out to me. I think we get this pivot soon and a bunch of QE and a bunch of inflation. People are going to work this out. We get this melt up move and then they're going to let all their friends and their buddies out at the top, ban them from owning stocks under the guise of protecting investors. And then I think it's time for the reset and CBDCs. That remains to be seen. At the moment, we don't have the momentum, but there is certainly the underlying fuel to propel this rally that I believe is setting up to come out at the end of this month. Some of that fuel is in the form of the risk reward being at an exceptional level for the S&P. The confidence levels are at extreme lows and the discouragement levels are at extreme highs. So you can see that plenty of investors could be caught offside, by a max pain move, and that max pain move would be to the upside. I know it's not a popular opinion. We'll get to the charts in just a minute. But before we get to the charts, got a very interesting thread from Rao here. He says, over the next 3 weeks, we have some very important signals setting up. First of all, the dollar basket, the Dixie, is at a week 9 reversal. Usually, we could go all the way to 13 before we get a true reversal. That means that the actual top in the dollar could only be a couple of weeks away. Because the week after is even bigger, with bonds setting up for a low. We're at a 9 count this week, and week after a second 13. So he's calling for a bounce in bonds. I don't know. Do we see, maybe we see a bounce in bonds if the Fed pivots to QE, but I don't see it otherwise. Okay. He says Ethereum in a week's time will put in a 9. And the NASDAQ too could take a few weeks for the low to form as we count to 13 too. Okay, so keep this in the back of your mind, because I'm going to get to the charts in a minute and show you that this is kind of aligning with my cycle count. The daily DeMark suggests possible further downside first. Maybe it's a flush out for a couple of weeks. He says, I don't know, it's not clear, but caution and focus is required. The technicals are, however, suggesting that a meaningful low is coming in October. And again, remember that October, because I'm going to show you on the cycle count in a second. Sentiment is record bearish too, which of course does provide fuel for a very hated and misunderstood upside rally. You are probably reading this thinking, no, it's all going way lower, earnings, recession, depression, and of course the latest fear campaign being pushed out from the media. You might be right, but he got the low in 2020 with the same set of tools, and he closed out all his positions back then. He says, I think the odds are good based on the macro indicators. He says, if anything's going to accelerate the current narrative, it's CPI and the bond market reaction. If bonds break foreign bond markets, then expect the Fed to take notice. It's very, very precarious, as liquidity in bonds is super low, as I've already spoken about today. And the dollar, well, that's just a wrecking ball. The Fed and the Treasury like a strong dollar as it imports deflation, but other countries are struggling, and the IMF and WB meeting this week will cement the view that the Fed needs to slow this down. So let's see how it plays out. Time to focus hard over the next 1 to 3 weeks. And so with that time frame in mind, let's take a look at some charts. So it looks like the dollar is coming in for that retest. Let's see what it does over the coming days. The chart of truth is still pressing higher, telling us to expect a Fed hike coming. However, when we go to the equity markets, I think we're going to open down today. The VIX is up a little bit, 5%. So that tells me that we're likely going to be taking out these lows and moving down towards this cycle low. So perhaps this blue fractal pattern here is off the cards for the time being. But the point is that whether we bleed much lower or not, we know that at the end of October we're due this cycle low. And I've been talking about this for a long time now, for many weeks, telling us to wait and be patient and expect this cycle low to come into play. And I think when we make this cycle low, we actually have a good chance at coming off of this very, very strongly to the upside. At the same time, we're seeing this from the NASDAQ. Look, trend line break, so perhaps we trend down here, and then we're going to finally crack this trend line lower and go. UKX, patience has been rewarded for the FTSE 100. We are seeing this pullback come down. So remember I said that it often likes to form these little bases, and then we'll end up moving the trend line over. So getting a bit ahead of ourselves, just take it one day at a time. But for now, it's a good thing we're waiting for this retest, and I'll continue to pay attention to this. Coinbase, MicroStrategy, Riot, and Marathon. Same technique for all of these stocks. We know that we are going to be trending into this 60-day cycle low for Bitcoin, and then looking to add that to long-term accounts. Tesla, still below this trend line. It's still looking for a break. And the same is true of Apple. Again, probably not going to come to the end of the month, but I think by the end of the month, we're going to have a good shot at a massive, massive upside rally. Oil still following this path to the short, the big short, and I'm looking forward to that, but a lot more patience required. I think got multiple weeks here. Yeah, multiple weeks to the end of the month at least. Gold, we're officially short as per all of the videos and analysis. So if you haven't seen that, go back and watch it. And if you have, then you'll know exactly what I'm talking about. Silver coming in for this retest. This could possibly be a long, but given where the cycle counts are for gold, I'm not a big fan of this position. It might be an idea to hedge in case the gold short flips. That's an idea anyway. Bitcoin working its way into its 60-day cycle low. Nothing much to pay attention to. Volatility is very, very compressed, so we do know that whenever this makes a decision, the move is going to be huge. That much I can promise you. However, up or down, nobody knows. You know what my bias is. Drop into this and go, but that remains to be seen. Same is true of Ethereum, of course. And XRP, what's XRP doing? Not much. It needs to come out of here in the near future, in my opinion. But I think it's probably got a good chance of that. It doesn't. I'm not too worried about the structure at the moment. Give this a few more days and see where we end up. Long and strong, continue to push. If you found value here today, I'd appreciate it if you could drop a like on the channel, subscribe if you're not already. Throw down in the comments if there's anything you want to see from me. And in the meantime, take care. All the best. Cheers. Bye.